Good morning, and welcome everyone to today's edition of the Premarket Prep Session here, July 27th, 2023, the last week of July, looking to finish strong. I'm your host, Adam Holland, stock options expert market strategist, and we're here to go over everything necessary for you to remain profitable here in these crazy already dropped. So we've got a lot that's going on here, a lot to keep up with, but as long as you make sure that you're making daily investments, right, doing what's necessary in order to stay on top of this stuff, you can stay on top of this stuff by all means. So let's see, I'm going to get Thinkorswim rolling here. In whether you're watching live or via replay, just stating your intention to get 1% better. Very important to go into every single day, setting your intention. You go in with a plan. If you go in to the markets without a plan, that means somebody else has a plan for your money. So make sure that you have a plan for your money and that you're executing that each and every day. And let's see here. Without further ado, let's go ahead and dive into what we got going on this morning. So top news, cancel the recession. The Federal Reserve pushed interest rates to a 22-year high on Wednesday with another 25 basis point move that'll bring its key rate to 5.25 to 5.5%. It's not enough for the central bank to declare victory on historic inflation just yet, but it sure looks like markets are charting their next steps with the CPI now down to 3% from a high of over 9% seen last summer. Not much changed in the new FOMC statement, and while Fed Chair Jay Powell did continue to voice caution in the accompanying press conference, he did shift his tone, especially with regards. Sorry, I should have Thinkorswim logo pop up here. So let's see here. Did continue to voice caution, but he did shift his tone, especially with regards to the outlook for the U.S. economy. Turning the corner, quote, the staff, meaning economists from the central bank, now has a noticeable slowdown in growth. Okay, so the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. My base case is that we will be able to achieve inflation moving back to our target without, let's see, of course, you guys know how intrusive Thinkorswim is, it just pops up over everything. Let's see here. Without the kind of really significant downturn that results in high levels of job losses that we've seen in many past instances. The federal funds rate is at a restrictive level now, so if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. You'd stop raising rates long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too. So overall, like the rhetoric that you want to see, right? I think at this point, it's pretty much once everybody and their mama began talking about recession, that's pretty much when recession is guaranteed to not happen. Again, whatever the popularly voiced opinion and narrative is, the opposite tends to happen. So when we actually got recession, aka 2022, what was everybody talking about, right? How we wouldn't get a recession, how it's time to buy the dip, da da da. Why? Because all the big money wants you as exit liquidity, and then what happens when it's actually time for the market to run up, right? They're like, oh, there's a recession coming. Sell all your shares to us, right? Sell us all your shares. So that's pretty much how it goes. Again, understand this, internalize this, so that when it comes around the next time you're ready for it, you realize the same signs. But overall, he said the same thing, right? What was happened was what was expected. He said what was expected, right? We're going to continue to be data dependent. We're going to continue pushing ahead, on our course. We're going to get inflation under control, yada, yada, yada. But I think it was significant. He's like, hey, we're no longer forecasting a recession. Did that, really mean anything for the movement that we got? No, not really. We nailed the kind of post FOMC minutes trade, which again is really turned into an art. Like, it's tough. FOMC days tear people up, right? When we talk about the movement up, the movement down, but we went with our, fade the first move strategy, and it really came in clutch for 110% profit on puts there to end the day. So a really nice day, just being patient and waiting for that, first move to go through, because again, a lot of people are sitting there, they're like, oh, I need the calls. Powell's going to pump, right? I'm sure people made money off the call scalps, but the move that ended up being the bigger move and the main move of the Fed day was that drop down, right? Which ended up being very profitable. So, another Fed day comes, another Fed day goes, and we've really kind of gotten the recipe for Fed days. Knock on wood. The important thing is just to stick to the recipe, right? Play light or don't play at all going into the Fed minutes. We historically haven't played at all, right? It's kind of been, all right, I'm going to chill out until 2 p.m. Sometimes we take chances. Yesterday was one of those days where it's like, all right, you definitely wanted to chill just because things were kind of all over the place. And it's not really from a standpoint of like, oh, this is going to cost money because, again, you're playing light, doesn't cost much money. It's just the whole like time and effort thing. That's really what you have to look at as you become a better trader and you do this more often. You don't want to spend all of your time like struggling for something that isn't really even super important. So that's kind of how you want to look to it, right? You're doing this in order to buy back your time, in order to get more time, to do what you love and do other things and explore other things. You're doing the exact opposite if you're sitting there staring, sweating over candlesticks that really just end up being chopped for, 4 hours, right? It doesn't, that's the exact opposite of what you're trying to do. So maintaining that perspective is important as well. Making sure that you remember why you got into this game in the first place and sticking to that. Following the news, the Dow Jones Industrial Average notched its 13th consecutive advance, marking its biggest win streak since the 1980s. And if it closes higher today, it will be the longest positive run since 1897. Holy crap. The latest U.S. GDP number for the second quarter will also be published this morning at 8:30 a.m. Eastern Standard Time. Expectations are for growth to have slowed to a 1.5% annualized rate versus growth of 2% in Q1. Though that's a far cry from many economic forecasts that initially predicted a deep recession to have already taken hold by the middle of 2023. So overall, SPY pushing higher off the back of Meta earnings, and also not really looking like we got, let's see, where was it, 8:30? Yeah, I mean, we started selling a bit since we got the data at 8:30. We can go ahead and check that out here. See what we got going on in terms of the GDP data. Dun, dun, Let's see. Are we caught up? Oh, looks like our guy is behind. Let's see. Isn't it just the worst when you go in and you're expecting something to be there and it isn't there? So real gross domestic product. Okay. Increased at an annual rate of 2.4% in the second quarter of 2023, according to the advanced estimate. The first quarter real GDP increase was 2%. So that's good. That's definitely, good, positive, bullish. Looks like, what were the expectations? 1.5%? Yeah, so that's good. That's positive. Another drop in the bucket for the bulls here as we've been struggling to get above daily resistance recently on SPY in that 456.70 area, right? That 456, 457 area. SPY has struggled the past few sessions to get over it. We've rejected it. And it looks like we might finally get over it today off the back of, meta earnings plus this positive data that we're getting here in terms of GDP data. So let's see here. Where were we at? Okay, so some Seeking Alpha commentary. Quote, the Fed appears to be on track for a soft landing, wrote analyst Komal Sarwar in a new article covering the Invesco NASDAQ 100 ETF. The current bull market is supported by strong economic fundamentals, corporate outlook, and investor sentiment, with sectors such as technology, consumer cyclical, and communications showing particularly strong results. Now, the S&P 500 has, quote, gained about 4% since earnings season began almost 2 weeks ago, with 75% of companies outperforming expectations, according to FactSet data. Now, in terms of earnings news here, we already talked about it. Meta rebound. So Meta platforms jumped 8% after hours on Wednesday after posting Q2 earnings that easily beat expectations. The report echoed an online advertising recovery signaled by rival Alphabet. So we did, start to see Google kind of signal that, ad revenue is picking back up, and Meta definitely cemented that. So that was good news, for Meta. They kind of foreran it. Let's see here. And Meta guided for Q3 revenue above estimates. As with other tech companies, Meta's earnings call focused largely on AI. And while CEO Mark Zuckerberg previously said 2023 would be a year of efficiency, overall expenses in Q2 grew 10%. Investing group leader Livy Investment Research said the results continue to show the company's progress in turning a corner. Though growth at a good price, believes Meta may not rapidly catch up with its steep valuation. So Meta and Google coming in, strong, kind of getting it back here for the tech names that were a little bit beaten down off the back of Tesla and Netflix missing. Um, and it looks like Google catching a little, kind of positive sentiment boost from that as well. After Google already had their nice gap up on their earnings. So we might see Google, begin to push again today. Something to keep an eye on here. Have their pre-market high marked off, right? That 132.49 is that previous high that they reached, during earnings. So if they can get above that on the hourly and hold, Google can continue to push up. And then, of course, we're watching Meta, for continuation. It's up big, definitely even more up more than the 8% that it was. I feel like when this came out. So Meta, another one to keep an eye on, right? If we can go down and kind of hit a pre-market support level, maybe around 325, peak below and fail. Good spot to grab calls and play them back up to 330 and then possibly even for a break of 330. So we're watching Meta here for a possible post-earnings play. And then, Google kind of off the back of Meta sentiment is something else to keep an eye on. Throw a 2 in the chat if you're with me, if you understand what I'm saying and you want to follow along for the ride. In terms of energy here, Russian roulette with Urals crude trading at or above $60 for more than 2 weeks. The U.S. government will likely reach out to Western allies to remind them to adhere to the price cap on Russian oil exports by ship. Enforcement will likely take place quietly out of fear that harsh public measures could upend energy markets, compounding worries in the West. Moscow is increasingly relying on smaller trading firms to export crude to Asia. And while this does not violate sanctions, it could hinder tracking Russian oil transactions. Elsewhere, NATO will boost surveillance in the Black Sea region, including with maritime patrol aircraft, amid escalating tensions after Russia pulled out of a key grain deal. So tensions just ratcheting up, right? Ratcheting up. Yeah, it's one of those things where the U.S. is like, hey, remember that we don't mess with them, right? We don't mess with them. We don't play with them. We don't sit with them. So make sure that you're not dealing, with Russia, not dealing with Moscow in any way, and that you maintain the sanctions that we have going on here. So Russia pulling out of the grain deal, and then now we've got, price cap. We're trying to remind everyone. I mean, that's just what's tough is that these countries are trying to do what's best for them. And, Russia's like, hey, I got that oil for the cheap. I got it for the cheap. And, technically they're not supposed to take advantage of that. But some, obviously low key, right, under the radar definitely do. So the U.S., NATO, right, just reminding everybody, hey, we don't mess with them. So we'll see, right? Things just keep the Nats. Oh, got him. Y'all saw that literally on camera. Just straight up Mr. Miyagi'd him right out of the air. Let's get a 3 in the chat for that. You already know how we get down on this side. If I see a Nat, he's going down. He's got no chance at survival. No thriving, no procreation. He's done. I don't know what it is. I think this is just the year of the Nat. I don't know how the Chinese New Year calendar goes, but I'm telling you, they're literally everywhere. Like everybody that I talk to has had problems with them. And it's crazy, especially if you work from home, because it's just like you're in the middle of a call, in the middle of this, and suddenly a net is 0.5 centimeters from your freaking eyeball. Anyways, you guys can see that I get hyper fixated on things. In terms of bankruptcy news here, Freight in Focus, Yellow Corporation, ticker Yell, dropped 26% to 76 cents per share before the bell as the beleaguered trucker could file for bankruptcy protection this week. It follows a cash crunch that forced Yellow to miss union payments and a hemorrhaging of customers as a union dispute forced it to limit pickups. The exodus could drive up pricing in the trucking sector, which is already facing low freight rates and weak demand. Yellow's customers include large retailers such as Home Depot and Walmart, and others have caused cargo shipments out of fear that goods could be lost if the company goes bankrupt. So this is already off the back of like some issues with the supply chain before, right? We had the strike happening. Throw a 7 in the chat for the big 7, right? Still out here, still thriving, still affecting things. Right, I guess the big 8 if you want to include AI, but the big 7 is still an important part of how the market is moving, and really now we've been seeing kind of a resurgence of issues in the supply chain arena. right? Between that strike that got resolved yesterday, and then now we've got this freight, trucking corporation that's about to declare bankruptcy. It's one of those things where inflation is going down, but these are the types of things that drive up the price of goods, right? Because of the fulfillment and everything of these goods. Benjamin said, "Assassin strikes again." Yeah, man. Look, I'm over it. It is all out war. Like I wake up in the morning, I got all these traps, and first thing I do is wake Billy up and tell her how many freaking gnats the traps caught. She's like, "Oh, awesome." Like, yeah, you don't understand. Must be a guy thing. Like, I'm like, look, I'm not yielding. We don't, right? It's don't tread on me type over here. Like, don't fly on me. We're not having it. In terms of today's markets in Asia, Japan, we're up 0.8%, mostly green, by the way, across the board. Hong Kong up 1.5%, China down 0.2, India down 0.7, London up 0.2, Paris up 1.4, Frankfurt up 0.9. The Dow up 0.1%, S&P up 0.6, NASDAQ up 1.2, crude oil up 0.8%, gold up 0.3, Bitcoin up a full percent to 29,482. We've got retail inventories today at 8:30 a.m. So those already came out. Wholesale inventories, GDP, and jobless claims. So we got it's a mix, right? So we got a mix of things happening this morning, just an amalgamation of things going on. And I mean, it looks like the market is still pushing, right? Market is still pushing even after that news, after whatever news came out. So that's what we'll be looking to take advantage of here today, right? Let's see if we can get some continuation, get some movement. In terms of earnings, do we have any more big earnings through the end of the week? Give me a second while I pull up the earnings calendar. At least like for the big important earnings. Thursday before open, we have MasterCard. We have McDonald's reporting, Crocs reporting here before the bell, Hertz. We have Roku after the bell. It doesn't look like anything Ford after the bell. Then Friday before open, we've got Procter & Gamble, Chevron, Sanofi. Yeah, so no more big names really reporting for the rest of the week. I see Chipotle reported. They didn't say anything about Chipotle. That means Chipotle might have had a rare miss. Speaking of which, I want some Chipotle. I've been craving. I'm my DoorDash today. Yeah, Chipotle. Ooh, the rare miss on earnings. That's crazy. Normally Chipotle kind of always hits. They're a really well-run company. So I'd be anxious to dig into kind of what happened with them. But they're, on watch possibly for kind of post-earnings continuation, right? Marking off that, little local high at around 1932. And, maybe we get a peek above there and fail. The only thing is Chipotle is super expensive. Like, it's just funny because their whole business is like burritos. And, their average order is probably like, I don't know, 10 to 13 bucks. And their stock is before earnings was almost $2,100 per share. And after earnings, it's $1,900. But it's just so crazy because, like, you serve burritos, but you need to do a stock split or something, because that's why I don't play Chipotle often either. I feel like even if you do have capital to trade with, it's just like I don't want to be spending $2,500 per contract on Chipotle, right? I just, in my head, I can't separate the two, so I just hardly ever play it anymore. But what else is happening? Amazon, ticker AMZN, could face antitrust lawsuit from FTC next week. Justice Department, EPA investigate telecom firms over lead cables. Boeing, ticker BA, hits 52-week high after reporting narrower loss. Yes, Boeing. We were in on that yesterday. Boeing, something that we were watching, getting over that intraday high, and Boeing pushing even higher here this morning. So Boeing calls coming through. Don't get it twisted. I hate Boeing. I don't like this stock at all. I very, very rarely play it. Boeing caused me trouble back in the day, right? Just starting out. It's an unruly stock. It's annoying. I don't like it, but it's like even that cousin that's really annoying but comes through every once in a while, that's Boeing, right? I'm going to take the money and I'm going to be grateful, but we're still not cool, right, between me and Boeing. That's still an ongoing feud that will probably never end. Now, in terms of XPeng, XPEV soars as Volkswagen buys in. So I guess XPeng got the nod, maybe some orders from Volkswagen. Coca-Cola rallies amid strong Q2 show and guidance hike. Union Pacific, so Coca-Cola, right? Was that yesterday? Did that already happen, or was that here this morning? Did they really rally? I mean, that's like like if you check the price action, I don't think that's considered a rally. It was more like they had earnings, they dropped, popped, dropped again, and then kind of went back up to midway to the earnings post earnings announcement high. Yeah, I don't. I feel like that's might be a little bit of a reach there. Let's see. Here we go. So Union Pacific jumps 10% after naming new CEO. Chipotle, CMG slides on rare comparable sales miss. That's funny. Literally everybody knows that Chipotle rarely misses, right? This is like, I don't know, Patrick Mahomes having a bad game. It's like it rarely happens. Chipotle they get it done. Insider Watch, Salesforce, ticker CRM, top executives sell stock. So Salesforce has been, on a tear, and we've been somewhat on top of it, right? Salesforce has had some call outs here over the course of the past few weeks. It's cooled off a bit. We were playing Datadog as well as kind of like a sympathy play to Salesforce, but it looks like a ton of executives were selling Salesforce stock. So it's tough because we never know. Are they doing it for taxes? Are they doing it because they think that the company is topping out? Do they know something we don't know? We'll never know. It's just kind of a thing where you just get the info and you're like, okay, thanks, right? And maybe you factor that into some decisions. But MasterCard, ticker MA, to end marijuana purchases on debit cards. Amazon, quote, thousands of AWS clients trying out new AI tools. I feel like Amazon is trying to stoke things before their earnings. And I don't know if that's a good or a bad thing. Like, when do they report earnings? Let's see, August 3rd. So they report earnings. Is that next week? I'm not one of those people that can do the calendar in the head things. I think August 3rd is next week. Yeah, August 3rd is next week. Okay, literally next Thursday. So they report next Thursday. I don't know. It just seems like I don't like, why not just say that in the earnings report, right? Why say that beforehand? I feel like they're trying to like stoke. Am I the only one that feels that? Or like, I feel like they're trying to like stoke hype going into their earnings. They're like, yeah, don't you guys love us? Like, we're doing all this AI stuff. And it's like, why don't you just save that for when you're announcing the other good news, unless it's not other good news that you're announcing? So I don't know. We'll see, but it just makes me give the side eye a little bit. But anyways, that'll wrap us up, on a conspicuous note, right? Wrap us up and take us out this morning for the pre-market prep session. As always, if you did get 1% better, just show love to the account. Instagram, YouTube, we're throwing up shorts each and every day. Make sure you're watching it so you can learn what's on there. Leave a comment, save it, send it to somebody. That way it helps me in order to continue to bring the amazing free content that I try and bring to you guys each and every day. So, other than that, let's have a great day. It's Friday Eve, people. Let's have a great day. Take out this week on a strong note, and just continue to push, get 1% better. Have a good one. I'll see you back here tomorrow I can't believe this week is almost over, for our last pre-market prep of the week. Have a good one.